Money Matters is sponsored by Winona National Bank. Personalized banking.
Everyone's heard of a home equity line of credit from Winona National Bank, but did you know that you can use the money for anything? Like putting that new addition on the house. Want to get in shape? Use it for a gym membership. Take the kids on an amazing fishing trip. Or use it as capital to start a new business. You can even pay a bunch of ants to pose in dramatic scenes to make your commercial more interesting. It's all possible with a home equity line of credit. Call a personal banker today at 1-800-546-4392. Winona National Bank, personalized banking. Member FDIC, equal housing lender.
Mary Stoltman joins us today. We're going to talk about health savings account. And Mary, thank you for being with us today.
Thank you, Dave. Appreciate your having me.
And can you tell us, just to start off, what is a health savings account, an HSA?
Well, Dave, a health savings account is a tax-exempt account established for individuals who are covered under a high-deductible health plan, high-deductible health insurance plan, to help pay or reimburse medical costs, qualified medical expenses such as medical care, dental and vision care, prescription drugs, those types of things, not only for themselves but also for their spouse and their dependents. Contributions to a health savings account are tax deductible, and any earnings on the account are also tax-free, and as long as those distributions are used for qualified medical expenses, they also are tax-free.
And then how do they work with a high deductible health plan?
The funds that have been contributed or set aside in a health savings account are used to help supplement or pay for those qualified medical expenses that may not be covered under an individual's high deductible health insurance plan, oftentimes due to the fact that it's a high deductible.
Could you explain who's eligible for an HSA?
Well, as I mentioned before, Dave, anyone who's covered under a high deductible health plan is qualified to open an HSA account. Couple of other things that are applicable: they cannot be covered under any other type of health care plan that is not a high deductible health plan. They cannot be enrolled in Medicare, and they also cannot be claimed as a dependent on anyone else's tax return.
Are there any limits to how much I can contribute to my account?
The maximum annual contribution limit that has been set forth by the IRS for tax year 2013 is $3,250 for self-only plans, with that limit being at $6,450 for family plans. There's also what's referred to as an extra catch-up contribution of $1,000 for individuals who are age 55 or older. Keep in mind that these limits are subject to change each year based on annual cost of living adjustments.
How is the account set up, and can my spouse also use that same account?
The account is set up as an individual account using that individual's social security number, and it gets reported to the IRS using their tax ID number, much the same as an IRA does, and it's established with a qualified trustee or custodian, such as a bank or an insurance company. Virtually anybody can make contributions to your health savings account for you. Your spouse, your employer, other family members, generous friends, as long as it's within the maximum allowable contribution limit for the tax year.
So can I transfer money into that account, say from an IRA?
A one-time only transfer or rollover from an IRA to an HSA is allowed. Keep in mind that rollover or that transfer, that amount becomes considered an actual contribution and is applicable to the contribution limit, the maximum allowed contribution limit for the tax year. To remember that those amounts are going to get aggregated with whatever's already been contributed. You don't want to go over what's allowed each year. That's one area where I would recommend that an individual consult with a tax advisor before they actually make that step to determine whether or not it's in their best interest to do so.
Are the funds strictly for healthcare purposes, or if I have the need for some emergency funds, can I borrow against it?
The responsible answer to that is that those funds in that health savings account should get used to pay your qualified medical expenses only. Loans are not allowed. And if a distribution is taken for any other reason other than to pay for a qualified medical expense, not only does you lose that tax advantage, it becomes a reportable taxable event, but the IRS also can and more than likely will impose a 20% penalty.
Well, Mary, thanks so much for taking some time to talk with us today.
Thank you very much, Dave.